Welcome all. Thank you for being here on this nice, bright, sunny day. Getting there anyway. I'm Ted Helms. I'm the Executive Director of the Brazilian American Chamber of Commerce, and this represents another event where we bring together understanding between the Brazilian community and the New York community. In this case, and I want to thank Mattos Filho, Amadeo Ribeiro, who's done a great job. He, speaking with Ivana from NASDAQ, had put together the thoughts and ideas, and what are we trying to accomplish in this event, which is first to have a broad overview of the debt and equity markets, have a panel discussion about that, followed by a second panel where we talk about actual transactions, the state, the regulatory system, things to look out for. So at the end of this, you should all be able to go and do your own IPO and sell it, okay? So that's the good news. And with that, pardon? Yeah, that's the deal, okay? You won't be able to do it on other exchanges, whatever their names are, I can't remember. But anyway, I would like to introduce Bob from the NASDAQ, from the NASDAQ. A few words there. And again, thank you to our sponsors, NASDAQ and Mattos Filho.
Thanks, Ted. It's great to have you here and to partner with the Chamber. It's a wonderful event and good to have you all here this morning. Welcome to NASDAQ. Again, my name is Bob McCooey. I run the international business here at NASDAQ, and we are so happy to have all of you here this morning for another day of some outstanding individuals from both the legal as well as the banking community to talk about the current situation in Brazil, but also to give you their insights as to how the market will continue to develop and tell you exactly where things will go in the future. Because you all remember when we were here last year, and in May of 2016, this esteemed group told you that things were going to play out in Brazil exactly the way they've played out. So you should make sure to listen very attentively to them today. When we last gathered here, as I said last year, this market site was under construction. And so we actually gathered out overlooking Times Square, if any of you who were here today remember. I think it's very appropriate to talk about that just because we were under construction in this physical place at NASDAQ, and certainly the market in Brazil was under reconstruction. And as we've opened up our brand new facility here with additional space, additional technology, a new studio for our friends at Squawk Box from CNBC downstairs, I think we've made significant improvements in our physical plant here, and Brazil has made significant improvements in their capital markets. The market continues to do well, one of the better performing markets globally. IPOs have come back, which we're going to talk about on the second panel. But I think at that point in time, there hadn't been an IPO in 3 years in Brazil, and that's certainly not the case now with more and more companies not only executing IPOs, but are excited about the opportunity for there to be capital markets transactions. So on behalf of my 5,000 colleagues globally, and our 4,000 listed companies, it's my great pleasure to welcome you all here to NASDAQ today. I know we'll have a productive day of discussion and dialogue, and we hope that this will continue our partnership with the Chamber, with Mattos Filho, and also with all of you, because it is important for us to share our ideas, to make sure that we all understand the great opportunity that resides in Brazil, and that we all certainly take advantage of it. So again, thank you for being with us this morning, and let me introduce the first panel.
Are we already? Yeah, it sounds like we're mic'd, right? Good morning, everyone. My name is Todd Crider. I'm a partner at Simpson Thacher, and I focus on Latin America, and opened our office in Sao Paulo in 2009, and for the last 15 years or so have been spending a significant portion of my time working with Brazil. And I have the pleasure of moderating this morning. I wanted to start by thanking the Brazil Cham and NASDAQ and our host, Mattos Filho, for the invitation. I think I'm speaking on behalf of all the panelists. and for putting together this event. Mattos Filho is an essential partner to many of the law firms here in New York and in Brazil, and really helps define the parameters of quality in the market. So we're delighted to be able to be here with them. Let me quickly introduce the panelists, and then we'll get right into the substance of the conversations. First, to my immediate left is Pedro Costa. Pedro, as anyone who speaks to him Portuguese would immediately know, is not Brazilian, he's Portuguese, but he spent many years in Brazil. He was head of M&A for Morgan Stanley in Brazil, and is currently head of M&A for tech here in the United States, but remains engaged with Brazil and Latin America as well. In his capacity, he obviously has dealt with the capital markets constantly. To his left is Anne Milne. Anne is Managing Director and Head of Emerging Market Corporate Research globally at Bank of America Merrill Lynch. So we're delighted to have her with us. To her left is José Eduardo Queiroz. José Eduardo is the chairman of Mattos Filho Law Firm and a corporate M&A and capital markets practitioner of note and distinction in Brazil. And so we're delighted to have him as our host. And then we may be having one other person arrive shortly, and if he makes it, I'll introduce Julio. So with that, we thought we'd start with a few slides. We're going to really focus on having conversation here, and then at the end of the period, at the end of the hour, we'll try to open it up to questions for the last 10, 15 minutes. But to set the stage, first, Pedro is going to provide us a little bit of data overhead. So we sort of see some data about what's been going on in the equity markets. We'll then talk about the equity markets, and then Anne will do the same for the debt markets, providing us some slides and a little bit of data, after which we will have a conversation about it. So Pedro, hand over to you.
That. You want me to present from there or
your call.
wherever? So I only have a couple of slides. I will spare you to the data dump, but I'll do my best to get myself into the equity strategist role as part of this discussion. But a few items just to set the stage. The first one is, obviously you guys have been following the index and the global markets, and the Ibovespa is at an all-time high. And
we're in front of the chart.
So, and I'll walk you through the key stats, even if you're not able to see the slides perfectly. But essentially, it's at an all-time high, and the key question that people are going to pose, I imagine, is what does that mean? Does it mean that the stock price is fairly valued, overvalued, undervalued? Where are we in the cycle? I think from a macroeconomic cycle, we are certainly close to the bottom. I would say you probably turned the corner from the bottom, but the markets usually do anticipate expectations. So in terms of thinking about whether a market is undervalued, overvalued, I think there's a few other ways to think about it. The first one and the most important is, what does it mean from a multiple perspective? And as you can see, the multiples implied in the terms of next 12 months earnings in the Ibovespa is 16 times. The US markets are higher than that. The Dow is at roughly 19 times. The S&P is at 18 times. To give you a sense, Europe is probably at 15 times as well. And most of the emerging markets as a category are the lowest multiple, roughly around 12 to 13 times. To qualify this multiple, it's probably, the average over the last 10, 15 years is in the 12 times. And I would say we're probably one standard deviation or almost that above the average. So are the markets richly valued today? It seems like it. But the multiple itself doesn't tell the full story because as a tech banker myself now, valuing a company at high multiple or valuing a market at high multiple, that's perfectly fine as long as you believe the intrinsic growth that underpins the market or the company. And one analysis that I don't have here on the slides, but that I've seen recently was what's the implied growth in perpetuity of earnings that is currently priced in the market. And I will tell you the real rate, the real growth rate in perpetuity today, priced in the markets is roughly 4 to 5%. You think about the long-term, steady state growth potential of the Brazilian economy, and it's up to you to come up with your point of view on what that means. In terms of other elements that have obviously opened the market for this rally, it's the interest rate reduction. We are now almost at 700 basis points of reductions, and I personally believe we are pretty much towards the bottom in terms of how much more the central bank can do. And as not a surprise, you'll see that the equity net inflows have been positive over the last year, and that obviously helped propel the stock market. The second slide hits upon something that is also pretty interesting, which is how much of the growth is driven by the Brazilian economy performance per se, or is it driven by the global environment? And so when you look at the slide on the right, we essentially disaggregate the performance of the equity market in two variables. One is called beta, and beta is just essentially the correlation of the growth to the remaining emerging market economies. So you see that most of the uplift has been driven for quite a period of time by the global markets uplift, and namely the emerging markets, because Brazil obviously is correlated to other emerging markets, how investors think about the allocation of their portfolios. The red line is really the disaggregation on what is unique to the stock market, Brazilian stock market, because if it wasn't for the red line, and I would look at only at the correlation, the market would have been up more than it has. And so what you should conclude is that there's a bit of a drag into the overall performance of the Brazilian market, which is driven by local events. And I think you probably, as part of this discussion, will touch upon what those local events are. But what is also relevant is that as of late, the red line has come up somewhat meaningfully, which means that the investors believe that potentially the country could be in the right track, at least on some of the key elements of its unique performance or macroeconomic setting. I'll pause here, and Todd, I think we can go and do some of the Q&A.
So, I asked Pedro to have 2 slides, so he put 10 slides in 2. It was very, very efficient, and obviously very helpful in terms of getting a lot of data out very quickly. So just to follow up on that, and you sort of allude to this, Pedro, in your comments, but maybe first, Anne, if I could sort of shift to you to get your response, and then Pedro and José Eduardo can add in. As Pedro indicated, we've seen a major inflow of equity. The Ibovespa has reached all-time highs, as you saw in the chart. Some of that is based off of the expectation that growth is going to come back over the next 2 or 3 years. And the question, obviously, is whether the market has already overpriced that expectation of upside. And what's your perception? Obviously, we're talking equity at this point.
Sure. Well, I'm just looking at it from a debt perspective. I mean, 2016 was a record year for Brazil in the entire emerging markets with returns of 25%. Year to date, it's still one of the best performing markets, well, not the number one, with returns of 12.5%. So when you talk to investors, they say, well, it's done, there's no place else to go. But if you actually look at the spread levels at which Brazil corporates are trading right now, which is the area that we focus on, it's still wider than any other country globally, except for Venezuela, excuse me on that one. So I think that you still have to look at valuations. It still is attractive. And there's a lot of, there still is a lot of fund flows coming in. I mean, on the debt side, what we see is we've had 43 out of 44 weeks of positive inflows. I would say that represents about 40 billion to the funds that we manage. That's a very small part of the overall universe, which is, let's say, 8 to 10% of overall AUM. That leaves 90%, which is still under management of institutional accounts that we really don't have any good measure to know what that is. But anecdotally, what I could say is 95% of investors I've spoken to over the last 12 months have new mandates. So the fund flow is still very strong. Valuations have been very strong, but there still is some room to go there as well on the debt side.
Okay. Eduardo, I know these are more for the banker economists, but your view, you have an informed, sort of a privileged position to see what's happening in the market.
I think what's happening in the market in terms of pricing and all the data that Pedro just showed indicate 2 important things. I think one is that we are benefiting from a global environment, so part of the valuations we are seeing in Brazil, the inflow of funds, has to do on how the global economy is performing and how people understand Brazil and its role in the global economy. But I think it also do reflect perception of people about the country, not only in the short term, but I think also in the medium long term. So if we look to the markets, I think to liquid markets, both in debt and equity, we certainly have seen a lot of inflow in the last 1 year and a half, 1 year, and this has pushed valuations and price a lot to a level that I think you can say it's overpriced, or you can say at least is well priced of Brazilian assets. But we also see a trend of people continue to invest in business in Brazil. And then we're not talking about liquid markets, but we're talking about the private equity firms still doing acquisitions in the country, strategic investors coming to have local operation in Brazil or to buy an existing company in the country, that I think also is an indication on how people perceive the country in the long term. I think we benefit in comparison to other emerging markets of the size of our economy. We are a big economy, a big internal market, so any company playing a global strategy will think about how to be present in Brazil, and this can be through acquisitions, through associations, to the start of new operations down there. And I think we are also seeing different type of investors investing in Brazil. So for example, if you think about the amount of money that is coming now from Asian countries and Asian investors, this is somehow unprecedented. This is not typically the type of investor we receive in the country, and I think it's also an indication on how people see the economy and the country performing in the future.
Julio?
Yes, hi. Sorry, so late.
Not a problem.
We're running terribly today.
So Julio Pomona has joined us. Julio is an equity research analyst from Citibank. So we're happy to have you here with us. Here we go. I was going to say, I think you probably need to be mic'd. So we'll come back to you. We're at the moment talking about the Brazilian equity markets and whether they may be overpricing the expected recovery. And Pedro, let me swing back to you. One of the charts that you threw up overhead related to the alpha and beta. Mm-hmm. And I thought that was fascinating because it showed how the emerging markets in general had overperformed relative to Brazil, and therefore you identified the beta as the factors that were Brazil specific, and in a sense were holding that performance down. Can you talk about some of those?
Look, I think some of the themes are very well known. I think there's an element of still political uncertainty, right? In the sense that there's a bunch of important reforms, and people talk about the Social Security reform, which certainly is one of the most critical ones, but I would say tax reform is also required. And there's a bit of labor enhancement in terms of some of the things that happen, and it's also the BNDES, which I personally always believed had a very important crowding out effect of the Brazilian capital markets, and I think that is something to be corrected, and I think it's a fundamental factor to bring interest rates down on a more permanent basis. But I think the economic agents just need to make sure that some of those reforms go ahead and get approved, and in which context are they getting approved? Because a watered down version of some of these reforms is really not going to fix the Brazilian problems, and some of the problems are really structural. I told you that from my point of view, the most important way to think if the market is undervalued or overvalued is what's the implied perpetual growth rate that is currently priced by the market. And you need to do that analysis on a sector by sector basis and sometimes on a company by company basis. But if you believe that structurally the Brazilian economy could grow much faster than 2 to 3%, then maybe the market is not overvalued. But for that to happen, in my opinion, you need to see really important reforms being unlocked, and the red tape in Brazil needs to be under control, the tax reform needs to happen, the labor reform needs to be implemented and executed, and the Social Security one is just a matter of maintaining the solvency of the country over the long term. So these are all, to me, pretty obvious and important reforms, and the economic agents need to believe that they're going to be implemented. I actually think the credit markets and the equity markets are driven by different factors, and maybe we discuss that as part of the second type of set of questions, but the equity is really driven by your belief in growth.
Thank you, Pedro. Julio, to pull you into the conversation, your response, we saw some charts earlier that obviously show Ibovespa at all-time highs. Your views in terms of valuation levels relative to the prospects of growth and other factors.
Sure, absolutely. We have just set a price target for the Ibovespa for 90,000 by next year. And my take on this is, I guess, slightly different because it is true, all these big picture, long-term deficit, tax, fiscal position are important, but we also have to see what point we're at in terms of the cycle. And we're at the end of a very long recession, beginning to see a recovery. We're seeing a creation of jobs which started at about 30,000 jobs per quarter. We're now running about 30,000 jobs per month. And we're still 3 million jobs below where we were. And yet we're beginning to see, that was 3 years ago, and we're beginning to see companies see tremendous operating leverage. Companies that have been cutting costs for the last 4 years are seeing slight increases in revenue, and you're seeing tremendous increases in EBIT. So if you compare Latin America to emerging markets, you will see that the operating leverage in Latin America is much greater and is driving actually the operating leverage in general in emerging markets. And within this, there are 2 countries in Latin America where we're seeing operating leverage grow. One of them is Colombia, slight growth, and the other one is Brazil, where we're seeing tremendous growth. So if you put that together with lower interest rates, you are seeing much greater free cash flow margin by all the companies in the Ibovespa, and that's what's actually, I think, driving also the market. And it's not necessarily, I would say, that it's overvalued, but that investors are looking at the cash flows that these companies are throwing out and appreciating that.
So two quick follow-ups. First, what do you mean by operating leverage? And then secondly, you then would sort of distinguish between the growth prospects for the companies relative to the country. In other words, the companies are coming out of this period of belt tightening, decreasing leverage, and now are in the position to sort of increase their earnings quickly so that the multiple that you see now is not higher than it should be. Is that the premise? Exactly. I mean, and there's another part to the multiple, which I'll get to in a second. We're looking at operating leverage as the traditional operating leverage, right? So increase in EBIT over increase in sales. Okay. Right? And if you compare, as I was saying, Brazil to all the other countries in Latin America, the operating leverage that you're seeing is off the charts here. The second part has to do with the multiples. You also have to think about the composition of the multiple of Brazil over time. So if we looked at the index in 2006, the weight of utilities, telecommunications, and natural resource stocks was much greater than it is right now. We've seen an increase in consumer discretionary and retailers, which carry a greater multiple. So if you sector adjust the multiple in Brazil, comparing it just to the standard average long-term multiple, it gives you also a different multiple. Okay, that's very helpful.
Could I just ask one question based on that too? What I see in the universe of companies that we cover in Brazil is that there's been a big effort though towards efficiency and reduction, but there also has been a reduction of capex. So there is concern that the growth has come through really cost cuttings, but not through a lot of new investment. Just was wondering what your thoughts are on that.
Oh, I agree. When I was talking to free cash flow, obviously delayed or cuts in capex have to do with it, but we also have to bear in mind what I was talking about, the recession, right? So if we think of the job losses as a measure of capacity, we have 3 million jobs that have been lost. So companies were ready to tend to a working population, 3 million jobs greater. So you have some excess capacity. And another way to look at it is installed capacity utilization is running at about 77%. So I still, I agree that CapEx has been delayed, but I don't think that we're at the point yet where companies need to spend in order to fill the needs of the economy.
I would, just to do some obvious math, you mentioned 3 million jobs lower than where we were. 30,000 a month is obviously improvement over negative, or 30,000 a quarter, but still it would take 10 years at 30,000 a month to get back to where we were. So, but the implication is we're sort of at the beginning. In order to make that happen, as Pedro suggested, would you agree, Julio, that some political reforms, some legislative reforms are necessary? Or do you believe that the private sector, based on its belt tightening and the cycle, is in the position to sort of grow regardless of those events?
No, I agree that you do need the long-term structural and fiscal tightening to happen. You need to stabilize the debt to GDP ratio. I would say that at this point, the equity markets are sort of giving the government the benefit of the doubt that there has been a change in trend, at least, and that we're seeing a trend towards reform. If you talk to people in Brasilia, it's to me very interesting that almost everybody has the same idea about reforms. You don't really see a huge pushback, right? Everybody has a take on it and a flavor, but we're moving in that direction. I think that's what the equity market is giving credit to.
But I think increasing productivity in Brazil by throwing incremental labor to the problem, it's a short-term solution. If anything, you'll see that demographic curves in Brazil are becoming unfavorable for the next few decades, and if anything, there needs to be a leapfrog in terms of productivity in Brazil. I think that's probably the key lever of growth in Brazil, is that if you compare their productivity to what an economy like that should have, it's pretty small, and that means re-educating the population, making sure that the jobs are funneled the right way. To your point in terms of the composition of the Ibovespa, I would say, I would say domestic cyclical companies will be the way to play the cycle if you're bullish. I do think that the markets do anticipate macroeconomic momentum pretty fast, and I also think the correlation of the Brazilian market to other markets, it's higher than people sometimes expect. So this ability of Brazil stock price performance continue to go up if there's a discontinuation on other key markets, namely developed markets. I'm personally pretty skeptical. And retailers, if anything, I think it's probably in the, and again, there's a bit of a perspective on short-term versus long-term. Probably I'm usually more long-term focused, but I would say that retail is probably one of the most challenged sectors, as you can see already here in the United States. And I think many of those elements will play out in Brazil. It's just a matter of time. It may take a decade or two, but it will happen.
Obviously, these are, for the long term, these are essential issues, and central to that are political issues. Temer obviously has survived despite potential prosecutions, despite obviously corruption-related scandals. The political and economic elite have, to some extent, rallied around him. I think his disapproval levels are enormously high, and yet the Congress seems to remain supportive. And from what I understand, most of the economic elite, in a sense, is as well, in terms of, I think, looking for stability and these reforms. José Eduardo, I'd be very interested in your perspective on the prospect of those reforms, of Temer holding on, of completing his term, and as Julio indicated, of this nascent sense of direction or common purpose, where that comes from and where it might get to.
I think that's a good point and a good thing for us to reflect on how this will impact capital markets. I think he will survive. He'll get to the end of his term and his presidency. But I think there are more probability of him being a weak president. Weak president in the sense that his political support is volatile, so it really varies. If you think about last week's rejection of the second denounce to prosecute, to investigate the president, we have seen a decrease in the support. It is a support that is really construed based on very simple and very basic exchange of positions in the government and approval of certain short-term initiatives that Congress people find useful for their own re-elections next year. And I think it's a government that people will think, okay, we need to think about the next government. So we may have some chances of approving, I think, small reforms. I think getting to Julio's point, there's a consensus, and this is very strong on the economic side, on the minimum agenda and the key projects that people need to tackle. So thinking about the next election, I don't think, and I don't see anyone supporting a very disaligned or different economic agenda in terms of the reforms. But those reforms are minimum. So we are talking about very obvious type of reforms that everybody agreed they are important and we need to do. But I think the real problem we have is that first we have this disconnection between the private sector and the public sector in Brazil. And for historic reasons, the private sector in Brazil really believes that we can handle our activities despite government, which I think is difficult and is dangerous to believe because in the long term, we need to think about where the country will be in 10 years and what we need to implement in terms of reforms to get there. And I think this is exactly what we are lacking now. We don't see a clear agenda or a clear set of ideas that will say this is how we wanted to position the country in the next 10 years. This is the direction we are going to seek. So I think the most likely scenario is that we are going to see this government coming to a conclusion, coming to the end of the term. There will be, in my opinion, less reforms approved than what we think is possible to do because of the type of political support backing current government. The agenda now will shift a lot for next year's election, so there will be a distraction of the political environment to think about who is going to be elected next year. And it's a huge election because we have elections to the federal government, to Congress, both Senate and the lower chamber, and we have governors and the state Congress. So it's a very important election, but we don't see anyone now stepping up and saying, look, this is the direction we should go. We like this type of leadership in the country. And I think assuming this is the scenario, probably we are going to see the country performing well. I think it has a lot to do with going back to the deepest recession we saw in the last century in Brazil, but eventually not being successful in developing all the potential the country has. I think this is probably where we're going to be in terms of the political environment.
I must say, if I could share a somewhat perhaps cynical view and then interested in the reaction of others, my sense is that Congress is behind Temer in a sense because everyone is concerned about their own position, right? Obviously the corruption investigations and the potential to really catch or reach almost anyone who's involved in politics. And that is sort of contributing to a sense of solidarity as everyone is, to some extent, under siege. And at the same time, we've been in this recession, and yet none of these major legislative initiatives have happened yet. And now we seem to be potentially coming out, as Julio notes. And as growth resumes, will there still be a sense of urgency? In other words, do we risk having gone through this prolonged recession and reached the end of it with none of the agenda being implemented or just very modest tinkering? Is that a risk that perhaps the market is not pricing in fully?
I think it is a risk. I think if you speak to anyone that is in the business environment in Brazil or that do follow the political environment in the country, will say that this is a risk of we as a country being capable only to approve part of the necessary reforms. And this has been the story of Brazil for many, many years. If you think like 20 years or 30 years back, we have had several opportunities to change, to tackle exactly the same problems we are facing now. And then because of a good economic period of performance, we say, okay, maybe we can do this next year or next term, we can push forward reforms. On the other hand, I think we have reached a very edge situation that people now perceive that a minimum set of reforms will be necessary anyway. If not to solve the structural issues we have in the country, at least to send a message to the markets and to the economic relevant players that we are moving in the right direction. So I think the minimum we are going to get, I think to be more ambitious and to really see the country changing on a structural basis, it will be a difficult challenge.
I actually think it's a huge risk. I think, and I think the short-term growth of the economy may make people feel that everything is fine and we can just push the problem down the road. And I think the more you delay the inevitable, the more dangerous it becomes. And so I personally think that's probably one of the key risks of the Brazilian economy.
Okay. Just to shift, we'll pivot very quickly, and Pedro, a little bit into your wheelhouse. Capital markets, equity capital markets particularly, and M&A are very closely related. Mm-hmm. What do you see happening in terms of direct, long-term investment, M&A flows from the outside? What are the prospects? And this heating up of the capital markets, we'll hear in the subsequent panel about the IPOs and the pipeline. Sure. What is the impact of that on M&A valuations and the expectations?
Sure. Look, I think there's a push and pull force in capital markets versus M&A. One is if the economy is performing well, the stock markets usually obviously will go up as a function of that, and the economic agents' confidence goes up. That is usually propense towards M&A, and the CEOs and investors feel like the backdrop in the economy is sufficiently strong that they should go ahead and do important strategic moves. Having said that, if the valuations in the public markets do tend to become perceived as very richly valued, then I would say that even though in Brazil public company M&A is relatively small compared to total flows, the private companies still anchor themselves into those valuation levels, and if they are perceived as being too rich, then I would say people will probably wait to see if there's a correction in the valuation cycle so that they can do M&A on a more accretive basis. I would say that in Brazil over the last 7 years, I think I've seen three types of flows. You've seen Brazil, bullish Brazil, where everybody thought that playing an emerging market like Brazil was so important that led to meaningful cross-border flows in terms of M&A. And you saw people paying pretty rich valuations, to be honest with you. Then you saw a scenario that was the reverse, which was meaningful correction to the point where some assets, either because of balance sheet constraints or otherwise, just forced themselves into M&A deals, and then those were opportunistic. And I think, for example, private equities stepped up into that type of game because you're doing opportunistic M&A at perceived good valuations. I think there's a third wave into these, which are companies that are being forced into M&A. And that is driven by regulatory elements, legal elements, balance sheet elements, and some of those are large transactions where you have a forced seller, which from a price perspective, it's not a good outcome. But I think going forward, I think the push-pull in terms of how people perceive valuations in the market is the most important, and I think people will want to see how the economic, political cycle plays out, right? Why would I do transformational M&A 12 months in advance of a very important election? Shouldn't I wait to see what happens there?
Let me pick up another theme. and see how that's been playing out in all of this. And the theme specifically is corruption. We've seen obviously some public companies, very prominent ones, Petrobras notably, caught up in Lava Jato, influencing obviously all of the construction sector, and then we've seen that spreading into other places. In the M&A market, at least my impression, and I'd be interested, José Eduardo, perhaps in your view, it's had a very significant impact in many sectors. First, if you could comment on that, and then sort of look at what you think the prospects of those problems sort of sorting themselves out in the short to midterm, or whether you see this will be a longer-term overhang in the market. And obviously, this also affects, to a lesser extent, I believe, the public markets. But if you could comment.
Sure. I think the corruption issue in Brazil, we have seen a dramatic change in the last 10 years. We pay attention only to the more recent period of time, talking about the last 3 or 4 years. But if you think about the last 10 years, we have changed a lot. If you think 10 years ago, I think was not a reality talking about Brazilian companies and Brazilian practices of the public sector, to think about the strength we have now in terms of the enforcement of law. Certainly the comeback to corruption has impacted, I think, the M&A market in two fronts. One is that a lot of companies that were investigated and were prosecuted because of bad practices on the corruption front were forced to sell a lot of assets. So a lot of transactions in recent years have been driven by these companies that, especially in the construction area, that have reduced a lot their operation, have stepped out of a number of sectors they have entered in the last decade or so. But I think the effects of this initiative in terms of the corruption will have a huge impact on the long term for Brazil, and for two reasons. One is that for the first time probably in our history, there's a perception, and it's not only a perception on the business environment or with politicians, but there's a general perception in Brazil that the law will be enforceable before anyone. We have this reality that very powerful politicians or business persons or famous people can then end up being punished, which I think is a very good thing for the country itself, and also very important for the business environment. I think if you do an M&A transaction now and you speak to people, you perceive how much more, how people will devote more time to think about good practices and controls and how is your relationship with the authorities, with the government, which I think is going to push the country to a different level in terms of the business environment. So I think the great contribution of the anti-corruption initiatives we saw in the last couple of years is going to be on these two fronts. One, very impactant and very important for the national perception of Brazilian citizens that the law is enforceable despite the person involved in the discussion, and also for the business environment. I think the standard that now Brazilian companies follow in terms of compliance practice and how careful you need to be, not only in your relationship with authorities and with government, but also with other companies, are much higher and much more similar to what we see in developed markets like the US or some countries in Europe. So I think despite being very difficult, very painful to the country, certainly was a driver for the recession in the last years. This is something that is going to be very beneficial to the country in the long term.
And perhaps I can get your views real quickly on this issue, because obviously as corporate debt issuers, a significant proportion of the Brazilian corporate debt was caught up in these concerns. What impact did you see it have, and do you see it have going forward?
Well, I think it's the number one question that new foreign investors ask is, or when a new company comes to the market, who are the shareholders? Have they been involved with Lava Jato? And what does this mean for their business model? They also ask, in other countries, can we have this in Mexico, Colombia, Chile, Argentina, whichever ones? And they sort of measure it, I guess, against Brazil, with Brazil being the extreme case. So clearly it's pretty much wiped out the construction sector from the capital markets in Brazil, and it's had a big impact on many other companies as well. Petrobras, Braskem are just two of the maybe more obvious names, but many others.
As they say, everything in Brazil is bigger, right? I think in some other countries, the Argentines will say that, just wait till we get going in our investigations, we'll give Brazil a run for its money. José Eduardo, and then I think we want to shift to debt, but one last question. The markets obviously are what they are. They're looking at all the factors, macroeconomic, company-specific, that we've been discussing. At the same time, we have the regulators that are responsible for regulating the capital markets. If you think of capital as the blood of the economy, the capital markets are perhaps the heart that pumps the blood and makes sure that the capital reaches where it should. What has been the response of the regulators in Brazil to this downturn? What has been implemented, if anything, that we should be aware of or that might be coming in terms of changes to try to help assure that capital is attracted to Brazil? And I know this is in the context of a market that had already made tremendous strides over the preceding decade and a half. But anything of note over the last few years or coming, in your view, on the horizon?
I think a major change, if you think about capital markets regulation in Brazil, will be on the enforcement of regulation. We have this new law that is giving much more power to the Securities Commission and the Central Bank to investigate, to impose fines and sanctions on capital markets actors and also on the financial industry. For many years, there was a criticism that the regulatory environment for the capital markets in Brazil was weak on this front of enforcement of regulation because fines were too low, the investigations took too many time to be concluded, sometimes not resulting in any sort of punishment or adjustment of conduct of the players involved. I think this is going to be very important. I think also there's an important debate in Brazil about the role capital markets should play in the country. If you think about the capital markets in Brazil, we have developed a lot, both if you look to debt and equity offerings, or debt and equity segments of the market, but we still a very selective capital market. So if you think about a new company, new business, people seeking for new money to develop its investments, capex or expansion plans, many occasions capital markets is not an alternative because capital markets in Brazil do require big tickets for you to be in the market. If you think about the ticket of IPO transactions in Brazil, they are very big considering the size of economy and the size of companies that could benefit of that. If you speak to private equity firms with investments in Brazil, this is a very constant criticism saying we should have an access market that will be a more strong exit strategy for capital markets players and for companies to become public. And I think this is also true on the debt capital market side. If you think about debt capital markets transactions in Brazil, and then I'm talking about the local portion of debt capital markets, this is very driven by the major commercial banks And it's not common to see smaller companies accessing these capital markets. BNDES has played an important role in recent years. I think there's a consensus that the role of BNDES will be reduced. So it is an actor that will not be as relevant as we saw in recent years. So again, I think this is the type of issue we always need to face in Brazil. We have a challenge and an opportunity. So I think we have a size of economy and an infrastructure, a sophistication that could allow us to have a much bigger, but much more spread out capital market structure in terms of permitting access to the company. I think with this important reform on the enforcement, we run a risk of new companies saying, you know what, this is too risky, and I will not go there. So I think we need also to think about creating different layers of regulation to facilitate the entrance in the market of smaller companies and try to foster more this type of initiative.
Okay. Maybe we could shift to debt a little bit, and I know you had some slides.
We have a few slides here. I'm going to have to take lessons on how to put 5 slides onto one. So,
Are we loaded up?
I do see it right here.
We can't get out?
Is there a...
There is a link left there.
Okay. So I think we have it loaded here already.
There we are.
Okay. So
Ted, we're good.
Okay, so this is just to put it in context of the corporate versus the sovereign market in Brazil. Everyone thinks, that the sovereign market is usually the largest, but what we've found over the last 5 to 10 years, and it's not just Brazil, that the corporate market, this is all external debt, is much larger. So you can see right here that the corporate market right now is about 140 billion versus the external, again, we're not talking domestic, the external debt market, which is it's been sort of relatively stable around 30 billion. However, if you look on the right-hand side, I think what you see is that the domestic sovereign debt market is really the largest portion of the Brazilian debt market. You can see which is staggering at over 1.3 trillion. You can also see the domestic corporate bond market that José was just referring to here is actually larger than the international bond market at 84 billion versus our 140. And then you can see the sovereign external is very small. It's a very different composition of issuers that you have domestically. It tends to be domestic companies, utilities, consumer, banks, and they're relatively small issue size compared to what you'll get internationally. But it does give you a snapshot of what the different markets look like on the debt side for Brazil. So, as I was mentioning before, Brazil still looks attractive relative to its peers. Year-to-date performance is a positive total return of 12.5%. And on the right-hand side, this sort of looks at the high-yield portion of the Brazilian market, and on the right-hand side, and the high-grade part. There's only a handful of companies which are still high-grade in Brazil, maybe 6 to 7 of them. The large majority are high-yield after the downgrade of Brazilian sovereign. But you can see that Brazil is right up there with Colombia, Mexico are the only ones that maybe have a little bit higher yield, Indonesia. But this is one of the reasons why investors are still very interested in Brazil. Average yields are much higher than you'll get in the rest of the emerging market universe. Same thing for the high yield side of it. Turkey and China on the high yield side have higher yields, but as you know, Turkey's fairly short duration, it's very volatile. There's a lot going on there. And China high yield is companies that have, let's say, 10 times plus leverage, dominated by the property sector. There have been some positive trends, and what I wanted to show you is it's not just the international technicals, which are the funds flows that we talked about, but which we do think has been the main driver, but there are improvements on the fundamental side. I think we saw the improving GDP growth. Bank of America is actually forecasting next year for GDP growth in Brazil to rise to 3%. That's probably a little bit higher than consensus. But we're also seeing improvement in corporate fundamentals. So we've seen strong growth in EBITDA. this year. Most of that's driven by two main factors, I would say. One is improvement in commodity prices. Brazil's a heavily driven commodity issuer country outside of the country with metals and mining, oil with Petrobras, pulp and paper, and others. And the other has been the appreciation of local currency, which in a dollar translation improves results as well. So you can see Brazilian corporates leverage peaked at 5 times, but we're already back down to 4 times, and we see this trend continuing going forward. That's in the upper left-hand side. Interest coverage ratio is low. It hasn't really picked up yet. We do expect that to improve. Liquidity. What do we mean when I say liquidity? It's actually the amount of cash the companies have on hand versus their short-term debt. So what you can see is the darker line is cash to short-term debt, and the yellow is cash to total debt. This is one of the strengths of Brazilian companies. They keep high levels of cash versus the debt that they have on hand. It did decrease over the last year, but it's actually increased over the last 6 months. So we've seen an improvement in liquidity of Brazilian corporates. And then this was the other thing that I've mentioned. CapEx has been declining. CapEx to EBITDA continues to decline, while Brazilian gross margins have begun to increase over the last few years. So these are the positive trends on the fundamental side, which attract investors as well to Brazil. And that's it. That's sort of to frame where we are on the debt side right now.
Thank you. Thank you very much, Anne. So to pick up on just a few questions on that, and then I'll take a couple of questions from the audience. One of the things that, whenever you look at the debt picture in Brazil, there are two things that immediately strike you. One is what you were pointing out, that the yield, in other words, the cost of that debt, is among the highest in the world. And even as a lawyer, I know that is sort of negative in terms of your growth prospects and story and returns for equity and other things in terms of the lower availability or the higher cost of leverage. Second point that always comes up is the cost of debt internally. And José Eduardo referred to this before. Obviously, it's come down very significantly, but it remains very high for local currency. Obviously, you're no longer subject to the currency risk if you're a local investor or borrower, and yet it remains very high. And the real interest rate, in other words, after factoring in inflation expectations, is among the highest in the world, right, in terms of return. I'd be grateful for comments on each of those, sort of the cost sort of globally, the cost internally, and is that really just reflecting what economic theory would say, which is a perception of very meaningful risk in the Brazilian both sovereign and private sector debt?
Well, I would say that yes, the cost is higher, and it does reflect additional risk, which includes the maybe more volatile earnings, the political situation in Brazil, the commodity cycle, Lava Jato, and so forth. Having said that, the average coupons we're seeing today are still much lower than we saw 5 to 10 years ago. So on the international side, okay, domestically rates have been coming down as well, and that's a calculation that companies have to make, is if they're going to borrow domestically, pay a higher rate in BRL or go internationally. Many companies right now are borrowing in the international markets with coupons 4 or 5%. That's not bad.
Julio.
And that has also implications for the equity market, because if you look at the earnings yield, so the inverse of the PE, there is traditionally a relationship between the PE and the yield on debt. As Anne mentioned, the rates have been coming down, and right now your difference is about 420 basis points, where traditionally it's about 300, right? That means that for people to invest in equity, they're actually getting paid more than they normally would have, moving from fixed income towards equity. And the other aspect is you have long-term institutional investors like pension funds who have to generate money for long-term obligations, we're seeing those rates come down, and that is also an additional inflow of money to equities. So those are two important trends that help equity valuations.
Let me pick up on the availability of debt internally. And, there was a reference to BNDES, and Pedro, you made the comment that you think that BNDES, which is the Brazilian Development Bank, had the effect of squeezing out a lot of other players in financing because it could provide lower cost, long-term financing that effectively no one could compete with because they were dealing with the sovereign balance sheet, right? BNDES has become much less active, and there's a lot of discussion of it having a diminished role in the economy, with among other objectives, bringing in other players. The equity markets in Brazil see a lot of retail and a lot of local actors. The debt markets remain dominated by a few very large banks, principally institutions. What are the prospects of that changing, of real disintermediation occurring, to bring in other actors in an active way in this market, whereas we see, the margins are very high and by most global standards would seem to support other players to drive a more efficient allocation or availability of capital?
Yeah, that to me is a key question. I do think that the BNDES for many years has had a crowding out effect just because of the terms of what you said in terms of subsidizing debt. I think the remaining component of the debt is very much bank debt oriented. So if Brazil really wants to have, I would say, a more balanced capital markets with an ability to have structurally lower interest rates, it does need to develop, local issuances of bonds and instruments alike of what you see in the United States. And it's still hard to see what's going to be the path for that to become really meaningful. The banks do still have an enormous power and say in terms of the way the credit capital markets work in Brazil. So there's nothing that is necessarily a short-term solution to that.
Other thoughts?
Yeah, I think this is probably one of the most difficult challenges we face in Brazil. Not easy to think about how we're going to resolve that. Part of that has to do with what we saw in the financial industry worldwide. So we have seen the financial industry concentration as a result of the crisis of financial institutions that we saw have failed and needed to be bailed out by government. So we saw concentration, and this has a very strong effect in Brazil that was already a very concentrated financial system. So I think to attract more people or more players to that arena is not simple. So I don't think this is going to be the solution. It can be, regulation can play an important role here. So if you speak with the central bank today, they are thinking about how can we put together regulations that will permit different type of financial institutions to have relevant play in the Brazilian financial system. So think about regional financial institutions or financial institutions that are very focused on a specific type of financing. Think about peer-to-peer lending, all those new initiatives that we see not only in Brazil, but we are seeing in many, many countries, and try to put together regulation that will foster this type of initiative without bringing systemic risk to the system. And I think certainly we need to think about how to attract more money from outside Brazil, especially if you think about long-term financing. Think about how we're going to finance all the gap we have in infrastructure. We don't have money. We don't have internal savings to do that. There's a limitation on how the Brazilian financial system will carry the type of risk, and it's not the type of risk that is the profile of big commercial banks, at least in our country. And government will have a very strong limitation on how to support it. So the only available pocket, in my view, is the international market. We need to think about how we can access different type of investors for different type of financing, to project finance, to securitization, to other type of financing that are quite new in Brazil, but I think it's possible to achieve. If you think about, for example, green bonds, which is something quite new, we are seeing some Brazilian companies being successful in reaching that group of investors that's a different block of money and bringing the money to the country. So I think that's going to be key if you wanted to resolve this very strong restriction we have in terms of debt financing for the country.
Yeah, I think historically, though, it was viewed as like it was a little club of let's say, the local state-owned banks and maybe a few others who participated in project finance, infrastructure financing. So maybe there needs to be some legal protections that are built in for foreign financial institutions who will come in.
Agree.
Well, I think the net interest margin in Brazil is probably the highest in the world. So clearly, if there's a market that could be suitable for fintech disruption, and that's why sometimes you see a bunch of articles in terms of all types of fintech initiatives that are happening in Brazil, it shouldn't be a surprise. It's just because there's so much a pocket of profit that can be essentially disintermediated and chased by other people. But you'll see that if someone really disrupts this market, probably the banks will be the first ones to acquire those companies anyway. So you should pay attention to that type of trend as well happening. But I think to José's point, which I think is the right one, the problem is issuance of local currency in volume to institutional investors is somewhat difficult just because there's so much currency risk that one is willing to undertake. I do think that going for infrastructure investment, that's going to be structured more like a private equity type of instruments where the regulatory framework needs to be very well defined. And that goes back to our earlier discussion about reforms. You cannot have a situation where you are asking billions of dollars to be invested into infrastructure in Brazil, which clearly is required and clearly should be a pretty interesting investment for many investors without a clear regulatory framework that international investors can trust, and that changes on rules won't happen middle of the game. So I think that's going to be critically important.
Yeah, I just have to get those who are on the next panel. I think if you go through there, because you have to get mic'd up, and maybe if you want, we have time for a question from the audience. But those who are going to be in the next panel, I see. And Francesca's got to find her way out. So any other panel members, I think throughout the back and over there, I'll lead you. But if you want to take questions,
sure.
You want to have a couple of minutes while we get them.
Thank you, Ted. If there are any questions for the panelists, yes, sir.
The elephant in the room usually with investing in Brazil is currency.
Currency.
It hasn't mentioned at all today. What is the consensus view from the panels on short, medium, and long-term prospects for the real?
Great question. Just to repeat, in case people can hear, the elephant in the room for investing in Brazil is currency, and there wasn't much discussion today. What are the prospects, medium and long-term, for the real?
Yeah, I can take the first shot at it. You'll see that most times the exchange ratio is really is driven by interest rate differential that also implies inflation differential. So to the extent that you can squeeze that interest rate differential, it should be a catalyst to have, a more stable type of currency element. But there's a counterforce to that, which is people that are playing carry trade today. They'll see that, the carry trade is getting squeezed. And you'll see that if you plug historically interest rate differential versus exchange ratio, in terms of you should expect that the exchange ratio will devalue based on the interest rate differential that you have between, let's say, the US dollar and the Brazilian market. And you'll see that even though the economic theory says that, you'll see that historically you don't see that correlation to become so obvious. So I think there's lots of noise that go into the exchange rate, which mostly is driven, for example, what's going to happen in the next political cycle. Are reforms going to be implemented, approved, and these are not going to be watered down versions? Because if people get concerned about the balance sheet of Brazil, over time, you should see pressure for high volatility in the currency. So I think you'll see currency probably at these levels, potentially, theoretically it should trend up if the interest rate differential equation continues to work. But you'll see that if people are really confident, bullish that the economic reforms are going to be implemented, growth in the market is going to occur, then you'll probably see people still continuing to piling on the currency trade, the carry trade. But the key question mark then is what happens to the central bank policies in the developed world? Because if you believe that there are 3 or 4 hikes going to happen in 2018 in the federal system, the Federal Reserve System, so you'll see that the carry trade continues to compress, and that's certainly not a good dynamic for the exchange ratio.
Pedro, your bank is projecting.
We're saying probably I saw statistics about 310, 320 this year, and then going to 330, 340 next year.
We would be roughly in the same ballpark for the actual numbers for the next couple of years, 330, 340 for next year. I would say that there's several things that matter to the interest rate differential as well. The first being that the BRL is non-deliverable, right? So if you're looking at the difference between Mexico, for example, where the peso is increasingly more volatile than the BRL, it has to do with the interest rate differential as well, that it's tradable 24 hours and a deliverable currency. So the interest rate differential matters more for the peso than it does, and it matters less for the BRL. I think it also, another thing that is also going to impact throughout next year is going to be the election. It's going to be a lot of fun. We're going to talk a lot about candidates and about policies, et cetera. But the bottom line is we're really not talking about a very different policy direction. And in that sense, I think that, you know, all the time that we're going to spend looking at numbers moving up and down, we're really all moving in the same direction, and that's why we continue to be optimistic. And finally, if you look at any emerging market, your currency return is going to be a key component of it. So if you really don't have any confidence as to where the currency is going, your investment in most emerging markets should be much more careful.
I would just say from a debt perspective, you can't always predict you can't predict where the currency is going to go. So you either have to invest in companies that are largely dollar linked, which are the commodities, or banks that automatically need to be currency matched, or you need to find out if a company hedges its position, its dollar debt or foreign currency position. There is a market in Brazil for currency hedges. Sometimes it's attractive, sometimes it's less attractive. You might recall a couple years ago, there were some companies that had some minor and major blowups due to leveraged derivatives on currency. So it's always important to know what the underlying company's hedging policy is.
Thank you. Another question? Yes, sir.
I have a question about infrastructure, because one of the major issues we have in Brazil, and especially talking about the future, is the lack of infrastructure. It's very weak, and we have not seen consistent investment in this area. This is also very influenced by government policy. The government has recently announced a very ambitious plan in infrastructure, roads and airports and ports, etc. They have included auction already 4 or 5 airports recently. And what is the appetite for those kinds of projects, long-term and regulated projects in your view?
It's a great question, because obviously growth relates to the capital markets, and infrastructure is a bottleneck for growth for Brazil. Pedro and I, when we were both in Brazil, used to love to go to a beach on the Sao Paulo coast, and I was amazed because there were all these amazing homes and hotels, just really spectacular beach, and yet the road at the beach was dirt with just potholes and unbelievable. Millions of dollars in each house on either side, but pothole road. And I asked people, and they said, well, we want it this way because that way fewer people will come, right? There you go. We should try that in the Hamptons, yes. The reality, though, is that Brazil, with the 7th largest economy, is a country that has, by some rankings, the 125th ranked infrastructure in the world. It's really astounding. And so to the panel, what are the prospects of starting to climb out of that hole?
I think part of that has to do with the interference of the government. What we are seeing now is a more clear vision, and I think if you think about the political spectrum I think we don't see anyone challenging this. We need to have a less regulated environment, at least in terms of the returns you can get it needs to be more, we need to have more previsibility. So we need to have, we need to obey to the countries, not change rules. We need to think about how we are going to permit international investors to invest that, and then the currency issue is very important. Are we going to be allowed to finance through dollar-denominated type of structures, and how we do that with the returns of the business, because it is in reais, how we handle the hedge situation. But I think more and more people are having this more clear view that the government needs to step out of that, not in terms of regulating the business, but not regulating the returns investors may get by operating regulated business, that essentially this is what's comprised when you think about infrastructure. So I think we are going to move to that spectrum, but it's going to be a process. I don't think it's going to change from one day to the other. It's going to take a while.
And I think there's a couple more components. One of them has to be making structures that are more comparable across countries. It is sometimes very difficult to look at a structure in Brazil and compare it. If I'm an international infrastructure investor, I'm comparing it to an opportunity in Mexico or in Colombia, and I'm trying to look at these things, and if I can't back it out and make it comparable, it complicates my life. If it is way too complicated, it gets to the point where I don't even want to look at it. The other one is something as simple as getting the requirements out in English and in time, not 3 days before the bid is due, but in time for people to read them and translate them and figure out what they want to do. And finally, to the point of structures, this is something we're seeing in the equity markets, is less complicated structures, right? The ONPN structures are starting to disappear. You're beginning to see companies collapse those share structures into a single share structure. That was sort of what the Novo Mercado was trying to do. Similar thing for infrastructure would be fantastic. And we saw that in the bidding for the airports as well.
I think it's really certainty of the regulatory framework. It's cutting down the red tape, and is the government getting out of the way, because there should be plenty of capital to invest in infrastructure in Brazil. If the rules are right, there's plenty of projects that people would want to invest in. I think the productivity gap of Brazil is so meaningful, and infrastructure is such an important part of closing that gap, that I would be shocked if capital is really the key issue. The issue is really getting the rules right, getting less government involvement in creating red tape and all types of hurdles that frustrate investors, and making sure that rules don't change mid of the game, because that's going to be a killer.
Well, we want to, one final comment. A book that I would recommend that I've read a couple of years ago is Why Nations Fail. But it could also be called Why Nations Succeed. And it really goes to the contingency of history, right? That it's not determined what we will be. It's not determined what our economy will be. There's no geographic determinism or cultural determinism, but there are decisions that are made and people along the way who make a difference. And so in Brazil, the future is contingent, and in part it depends upon us to help make the right decisions, to bring about, hopefully the growth story that will drive the capital markets over the next several years. I want to thank our panel very much for joining us this morning. Thank you.